Hello, everyone. Welcome once again. This is the second part of Elliott Wave Analysis. So hopefully I will see people that they have been here yesterday as well. It was a pretty straightforward, I think, yesterday. I tried to simplify Elliott Waves as much as I could. So hopefully you enjoyed the yesterday. For people that they haven't attended yesterday's webinar, it will be good for you guys to see the first part as well, because today is a bit more in depth, a bit more complicated one. Not too scary, but yeah, it's the second part. It's a more advanced one. So yeah, before we start, as usual, please note that this is recorded. You can ask anything you want. I'm here to help anyway. Also, I would really appreciate a quick feedback in regards to the audio and visual of this webinar, just to make sure that you can hear me loud and clear. You can see my screen as well. Plus, I put on the handout as well, so feel free to download it. And this webinar is recorded as usual, so you're gonna receive a recording after we are done. For any questions, I have a question, please. Oh, already? And you seem angry, Benjamin. Yes, go for it. By the way, you can ask me anything you want, and until Benjamin writes down his question. Also, this is our email address. Feel free to send me any question that you have with screenshots or whatever. So I will be really happy to reply. Benjamin, I'm waiting for your question, dear. I'm here to ask. Ah, well, I'm not angry. Oh, because you put the face that you put was an angry one. Sorry, the emoji that you used. Yeah, I'm just confused. My question is, yeah, go for it. Yeah, sure. So I will wait a bit. I realized that I have the wrong. Hello, thanks to this start. How do I access the part 1 of this trading from today? Okay, of course. Actually, I'm going to send to everyone the link. Hopefully the girls managed to upload it already. Let me send it to you. Just give me a second. Give me a second, guys. That was Okoro question. So Benjamin still writing. Okay. So, okay. Okay, because we already started with questions, I will put on the disclaimer just to gain some time. So I will not read it out loud. It's there, and I will keep it over there until I reply to Benjamin's question. I just heard someone say that the Elliott Wave is not the best strategy to use currently because it's more subjective. What does he mean? Okay, it's not completely wrong, because okay, what he meant, first of all, Elliott Wave, it is a good strategy. No one can claim anything else, because as we have seen yesterday, if it's there, it's right there, and it works. It works, okay. But the thing is it's not so easy, and it's not so common to identify an Elliott wave. That's why it's a bit. So, okay, for example, remember the euro dollar, so sorry, I'm trying at the same time to find the link. Sorry. Remember the euro Swiss, the euro Swiss that I showed yesterday. So first of all, you should know that Elliott Wave is not an easy thing to spot, okay? But if you spot it and if it meets the percentage that I sent yesterday, then it's a strong signal for you. Okay, why it is called why now it is called subjective. Okay, so remember that the theory identifies two types of waves, right? I'm not sure whether I have it here as well, so let's go along with the remember that we have impulsive waves, right? And we have corrective waves as well, right? So, so it is subjective. When he called it subjective, because what subjective means? It means that not all traders, all investors or market participants interpret the theory the same way or agree that it is a successful trading strategy, because not anyone's okay, you know what, without an example we cannot do a lot of things. Okay, so I have euro dollar right now, okay, and I can see for me as Andria, I see, okay, this might be the very first leg of an impulsive wave to the upside, and this might be, I don't have a confirmation yet, the second wave, but this might be the beginning of the third wave. Okay, this is what, so I will start to monitor, for example. But this is me as Andria. It doesn't matter that someone else will see what I see. Okay, maybe someone else like Benjamin, for example, will say, not, no, Andrea, this is definitely not a wave. This is just an ups and downs. It looks like a bit of a ranging market, or for actually Benjamin could say, Andrea, this might be, we're not sure yet, we haven't confirmed, right? It might be an inverse head and shoulders, right? So that is why some people call it subjective, because not all traders could interpret the same theory the same way or agree to each other. But that's not solely with Elliott Wave theory, okay? But okay, this is just when you start interpreting the theory. If for sure, if you've seen, indeed, you have applied your percentages on, you have seen that the second wave didn't overlap wave one, the third wave, indeed, it went up as high as maximum 3.23% of wave one. So if you see the criteria being met, then yes, you have an Elliott wave, and it is what it is, and you can prove it. So from some subjective, it turns into a real one. Is for volatile pairs such as, okay, Oludontun is saying, in my view, I think Elliott wave is for volatile pairs such as gold. I cannot like either agree or disagree, because for me it's not like I will not just stick and say, okay, I will only check volatile pairs such as gold, pound, yen, because in those I will find, or I can find quite often, Elliott wave theory. It's not that simple. If you see it, it's there. If you can't see it, then ignore it. It is what it is. For example, now that I was just showing you euro dollar, now I notice that it looks like an inverse head and shoulder. So I spot something like a head and shoulder. It might never been confirmed. It might never break the neckline, and it might never like been confirmed. So, but I saw it. Someone else might not notice. That this might be an inverse head and shoulder. That's why is trade what you see. Ignore the rest. Ignore what other people are saying. Each one of us has a different opinion, has a different eye to detail. Okay, each one of us is different anyway, and we are training a different way because there are millions of strategies. It's not just black and white. For example, I can never understand. I'm really struggling to understand actually the awesome oscillator. Stuart really likes awesome oscillator, but me as Andrea, I'm struggling to understand awesome oscillator. Also, I'm struggling with Heikenashi. I started like getting to the point of it, but I'm still struggling with it. So not every single theory, not every single indicator is good for everyone, or it could be understood from everyone. Some of us are more mathematical brains, some others are more theoretical brains, so okay, so cool, stay cool, calm down, trade only what you see and ignore the rest. If for you, if for you it's there and you can see it, start monitoring it. Start monitoring. Don't take a trade. Okay, start monitoring, and once you feel that it has been confirmed, your suspicion has been confirmed, and also just to gain more strength, check your MACD or check your RSI. If your suspicion has proven correct, and you feel ready, and you feel that yes, indeed you are right, it has been confirmed, also MACD support this direction as well, blah blah blah. If you see it, then enter. Okay, it's that simple. Don't be try not to affect your don't be affected by what others are saying. Okay, so let's move on. And this is what we covered yesterday. So now is part 2. Okay, guys. Okay. Oops. Okay. So we're gonna sit together. Okay. Here we are. Oops. Why my mouse stuck? Sorry. Oh, I missed sending the link. Sorry. So the link. Where is my the link? The link for the webinar. You told me. Give me some time, dear. Who was it? It was Kenneth. Wanted the link. I'm not great on multitasking, so. Found it. Copy link, and I'll send to everyone. Here's the link, guys. Okay, for yesterday's webinar. So we are good to go. So today we're gonna see a bit of a more advanced concept of Elliott wave analysis. So I showed yesterday the simple one. Okay, the simple one, the very simple one, which looks like that, and then sometimes we might see the reversal and the start of a new trend to the downside. So this is like the very simple Elliott wave concept, but there are a bit more advanced ones, which is what we wanna try and cover today. So we're gonna see motive waves, corrective waves, and how to determine entry levels. See some examples as well, and to summarize at the end everything. So, okay, so remember that yesterday we spoke just for wave 1, wave 2, wave 3, wave 4, wave 5, and potentially on the end of this overall uptrend, potentially the start of a new trend to the downside with ABC. However, as I said, are not only black and white. What I mean by that, that means that in each wave, if you are not interested in a longer term time frame gap, but you are more of an intraday trader maybe, or you want to trade both, you want to trade in the long term, the overall upward trend, so opening a long position, but also you want to open some intraday positions as well. So you are interested on zoom in and go to a smaller time frame, right? So if you're interested in something like that, and Benjamin, we have webinars on moving averages and RSIs. They're a bit old ones, but if you enter the past webinar website, which is, let me find that one as well. Where the webinar page is, at the very bottom, you can see past webinars. So feel free. So here it is. I will send this to everyone as well. Okay. Over here, you can see our recordings for RSI and moving averages webinars. So yeah, as I was saying, if you might be interested on trading, like in this example, is an uptrend, right? You might be interested on trading the overall trend, or plus you might be interested on trading the corrections like the wave 2 or the wave 4, but you might also interested in a shorter time frame. So you have to zoom in, right? If you zoom in, okay, you might it's not always the case, you might identify that, for example, if I zoom in while the wave 3 is developing and I zoom in from daily chart to 4-hour chart, I might identify that my third wave is also doing it in a smaller scale, another Elliott wave. So I might see 5 smaller waves within the third wave. So why not trading, but in a smaller position with less, like with a tighter stop loss and resistance and target areas, so to have some short-term entries as well. Okay, traditionally definition of a Elliott wave includes 5 waves, 3 impulsives and 2 correctives, right? Yeah, so okay, that's the overall trend. But now if you decided to go in a smaller time frame because you would like to also trade in the very short time frame, such as 30 minutes, 1 hour, or even 4 hours time frame, you might notice that the Elliott wave theory could be an Elliott wave is being developed in smaller time frames. So traditionally, based on the theory of Elliott wave, in each each of our impulsive wave, okay, impulsive, remember, impulsive is 1, the 3, and the 5, because they are on the direction of the trend, right? So each impulsive wave in each of the impulsive wave, we could see 5 smaller waves. So each impulsive wave, 1, the 3, and the 5, we could see being subdivided into 5 waves, which is the theory of Elliott anyway, right? So you can see if I zoom in on the third wave, I can see 5 waves again, 3 impulsives and 2 correctives, right? If you are like, if you want, you can zoom in the first impulsive and third impulsive of, and see another 5, and so on and so forth. It depends on which the degree you want to take it. But yes, every impulsive wave traditionally has 5 waves in. By the way, I'm saying impulsive and corrective. Impulsive also is it can be impulse. So okay, oops, zoom out. I sometimes mention impulsive waves and sometimes mention motive waves. It's the same thing. Motive and impulsive is just the same name. It's just it refers to the waves that they move in the direction of the trend. Okay. So each of these waves is subdivided into 5 waves. So like you can see in this figure, the impulsive move is subdivided. Each impulsive move, so 1, the 3, and the 5, is subdivided into 5 minor degree waves. Now, so if I will remain on the third one because it's the largest one. So we can see that there are 5 waves. We name them as I, triple I, V, and V. So 5 waves into the impulsive wave with number 3. So the same rules that we have seen in the last webinar, in yesterday's webinar, the same rules imply if you are going to a lower degree. The same rules. Always you need to remember that. Oops, on my pen, my highlighter. Always you need to remember that. The second one must never come down to the lowest level of wave 1. Must never retrace more than wave 1. Can never come down here or overlapping it. That's wrong. So the same rule that we have seen yesterday. Rule number 3, wave 3, which is this one, right? Yes, wave 3, that one, the triple 3. Okay, sorry, triple 3 can never be the shortest of these 5. It can be greater than 1 or greater than 5, but it will never be the shortest of all. Okay. Wave 4, which is this one, can never overlap the peak of wave 1. So it can never, I need a eraser. So wave 4 can never come down and break this support level. So the peak of wave 1, never. If that happens, then you will not have a 5 waves. Okay? And you not have that, yeah. And wave 5 needs to end with momentum divergence. So what that's supposed to mean, that in wave 5, we're gonna start seeing that the momentum is no longer positive, that the momentum is decreasing. So we're gonna have more signals that it has reached to its end. And the very first signal can be found with this correction over here. Okay? So these are the numbers in order to confirm what you're seeing. Remember, wave 2 must never be more than 85% of wave 1. This is the highest that it can get. but it's between 50 to 85. It's the same numbers as yesterday, guys, okay? But I will stick now to wave 5, because on wave 5, which in this case is that one, right? Wave 5, it will be either, if you put your Fibonacci in wave 4, if you put your Fibonacci's over here, then wave 5, it will be from 123% up to 161% Fibonacci expansion of wave 4. If now you haven't put your Fibonacci over here, but instead you have put your Fibonacci in wave 1, then if you drag and drop it on wave 5, sometimes it could be equal, okay, to wave 1. And wave 5, or alternative, if you put a Fibonacci from wave 1 up to wave 3, which is over here, then the wave 5 will be they will be as big as 61% of this move over here. So it will be this lengthy. Okay, these are some alternatives just to find, if you're gonna trade wave 5, just to find target levels. Okay, these are options that they could provide you, target levels. The peak of wave 1, is the peak of wave 1 not V? Yes, it is V. So you mean here, yes, wave is, yeah. Or alternative is V, yes. Not sure. The reason that I stick to that one is because I said that I want to trade in a smaller scale the wave 3. That's the only reason. Nothing else, dear Davo. So yeah, so let's move on. So yes, with the Fibonacci ratios, guys, I put always the Fibonacci ratios because these are the ones that they will help you identify exit points, entry points, targets, stop losses. Okay, because by being aware that wave 5, for example, so in this case, because we are studying the wave 3, so the wave V, the wave 5, fifth wave of, so this one, by being aware that it cannot get more than the 161% of wave 4, then I know that I could put my targets. I could put multiple targets. I could put target 1 at the 123% Fibonacci expansion, and my second target at the peak, which is 161, because it cannot get more than that. Okay, so I will make sure that my position will be automatically closed as soon as it reach those levels. So it's a risk management approach. So what else I wanted to say? By the way, yeah. So now this is a more. I will recommend you a picture. This website, because in this one, okay, today I'm not gonna cover all the different Elliott waves that exist, but I would like to make sure that you understand the importance that we're gonna cover today. By the way, let's stay here for a bit. Okay, let's stay here for a bit. So, and let me clear a bit this mess. So let's assume, guys, that was, so I was trading in a daily chart, right? So this is what I was seeing in my daily chart. I took my position, I entered the market long because it's an uptrend, so I feel nice. But I'm bored a bit. And I'm saying, oh, why not trading intraday as well? So I went down to the 4-hour chart or 1-hour chart, and I noticed, and I noticed that I have impulsive waves in the smaller time frame as well. So that my wave 3 has 5 subwaves in, or is developing 5 subwaves. Okay, that he started posting his first wave, then second, and then I saw that there is a third breaking the eye level. So I saw that my third wave is started developing another Elliott wave in a smaller time scale. What I want to highlight at this point is that it doesn't necessarily mean that if you go to a lower time frame, you will see 5 waves in each of your impulsive waves. Okay, so if you see your third wave developing an Elliott theory, fair enough, but it doesn't mean that on the 5th wave you might see again the same formation. It might be full of bulls, let's say, so it might be just, come on, might be just a straight line, only bullish candles. Okay, so it doesn't mean that all the impulsive waves will be subdivided into 5 waves. We might have a lot of strength, a lot of bulls, so the final wave might be full of bullish candles. So it might be a straight line. Okay, so trade what you see. Okay, the website that I sent you, which is actually explicit for Elliott wave, and actually the one that I have just sent you, it will give you more examples. Now let's move on. Anyway, the whole webinar is based on that website because it was a very brilliant one. Now, let's move on to the leading diagonal. Again, is a pattern that we are seeing in an impulsive wave, or otherwise called motive wave. So this formation that I'm showing you over here, you're gonna see it only in motive waves, impulsive waves. So either in wave number 1 or wave number 2, either in wave number 1, wave number 3, or wave number 5. You will never see it in a corrective wave like the wave 4 or wave 3, okay? So sometimes, instead of seeing, if we zoom into a lower time scale, instead of just seeing just 5 waves like that one, we are seeing something like ascending triangle. So we are seeing a lot of waves, but by connecting their peaks and their bottoms, it looks like a triangle, a diagonal, an ascending triangle. Okay, so what you can do if you see something like that, you can trade it if you want to. Okay, so every time that so by connecting the peaks and the lows, every time that it retests the low level, you can trade on the rebound, or every time it retests the upper level, you can trade on the reversal of it, and etc. But the best way to do this, if you decide to trade something like that, then by the way, wait a minute. So this is something that you can see only in wave 1. So that's important. So you will not see this ascending triangle or leading diagonal, whatever, in wave 3 or in wave 5. Usually, because it's a very special, very unique formation, usually you can see this special type of motive wave as a subdivision of wave 1, or a subdivision of wave A. What is wave A? Remember that so we will either see it over here Or if we were in a downtrend and then now our uptrend started, our corrective waves in the beginning of an overall uptrend started, we might see it on the very first wave of this reversal, so on wave A. Okay, so it's usually something that takes place in the very first wave of a trend. Okay, so we can either see it, if we're in an uptrend, we can see it in the very first wave, or in the wave A if we had been in a downtrend and now an uptrend started. So it's not something easy. I'm highlighting that. It's not something easy. Okay, don't try to find one. If it's there, it's there. If it's not, nothing will happen. Stay and wait for the next opportunity. Okay, so yeah. So it is a subdivision of wave 1, as I said, or in a subdivision of wave A. If you see something like that happening, so A, B correction C, so it's the beginning of a new uptrend, apparently. So, so what else? So it is called leading diagonal, okay? This formation, because it's usually characterized by overlapping of wave 1 and wave 4. Okay, you see over here they are so close to each other. Oops, so close to each other. So in some cases, if you see something like that, the wave 4 might touch the peak of wave 1, or may overlapping it sometimes. Okay, but be careful. This is only if you spot something like that. If you spot this leading diagonal, if you correct your lows, you correct your highs, and you have this ascending triangle, and only if this is a subdivision of wave 1. Okay, only. It's a very rare thing to see, but if it's there and you remember this theory, then why not trading? And because it will look like a wedge shape. Okay, I'm not saying that you have to trade it. I'm not saying that you have to try and find something like that. No, be chill. But if you sit and you remember all the things that we mentioned, don't feel stressed if the wave 4 in this leading diagonal touches the peak of wave 1, because it's okay. It may happen, it may not happen. It's not a condition. In this case only. In this case only. Okay. So yeah. So in this condition, if you spot something like that, usually in this wedge shape, whatever, it is consistent. It is a subdivision of 5, 3, 5, 3, 5, 3 waves, or 3, 3, 3, 3. What I mean by that? So if I zoom in a bit, we can see that we have 1 wave, 2 waves, 3 waves, 4 waves, 5 waves. Indeed, if I zoom in even further and see the subdivisions of each of these waves, we see again 5, 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. So it's a 5, 3, 5, 3, 5. So if you spot this over here, then you know that on the very last wave, there will be five smaller waves, 3 impulsive and 3 correctives. So you might trade this final wave, right? What else? Or it might be 3, 3, 3, 3, 3. So 3 waves up, 3 waves down, 3 waves up, 3 waves down, 3 waves up, and that's the end. So in a leading diagonal, we always gonna see one of these 3 options. By the way, guys, this is in case that you are intraday traders, trading in a smaller time frame. You already spot this, for example, in the 1 hour chart. So you saw this up, this down, this up, and you go down. So you were over here when you saw this up and down. And you want to go down to the 15 minutes chart to see whether there are indeed there are waves, and you want to trade the 15 minutes chart. Okay, that's it. So it's very complicated. It's an advanced webinar, and understand that it's getting messy, but it is what it is. So I'm sorry for that. Maybe when you get more experienced, you can easily apply or spot this kind of waves. So have in mind that in an uptrend, what I wanted to mention, sorry, now I'm a bit confused. So yeah, in an uptrend, where our overall trend is upwards, so our A, or otherwise one wave, the very first wave, is going up, then in this case, and if we spot a leading diagonal, okay, leading diagonal by correcting the peaks and the bottoms, usually the wave 1, so that one, is one of the longest. Usually, is not a rule, okay, it's a general guideline. Wave 3 can never be the shortest, for sure, okay, that's a fact. And leading diagonal can be confirmed if in the position of wave 1 of an impulse, or a wave A of a zigzag formation, is what I showed earlier. So yeah, we have covered that. So let's move on to a different formation, which is pretty much the same thing. So like we saw that a leading diagonal can be seen on the very first wave of each trend, but this is because this is something that is difficult to be spot, because it's the beginning of a trend, so you are not really sure whether there is a wave and it's the very first wave. So this might be a bit tricky, guys, okay? But you should know that even if you missed that, you might find something similar in the final wave, in the fifth wave of our trend. So you might see a diagonal over there as well sometimes, okay? So again, it's the same mentality. It's a subdivision of 5 waves. But the only thing that is a bit different in the final wave of our uptrend or our downtrend is that the formation will be 3, 3, 3. So we're going to have 3 ups, 3 downs, 3 ups, 3 downs, 3 up. Okay, we won't have 5, 3, 5, 3, 5. If it's at the very last wave, usually it's called ending diagonal, is a 3, 3, 3, 3 formation. Okay. So for example, if you were already, so let me, actually I will bring the example of Euro Swiss again. Is it here? Euro Swiss, and it was back in the 2018. Let me get rid of that, and that, and that. I'm going down to 2018. Come on. Oop, here it was. So it was my first wave, here to here. Okay, obviously I'm up back to 2017. So from weekly, I will go, so I will put a line just to find my spot. Okay, from weekly, I will go daily. And here I am. So what I can see over here, a sharp gap up, sideways up. Okay, I want to see whether there is a pattern. Oh, doesn't let me go back. Oh no, cannot demonstrate it. Okay, I will find, because the platform cannot go back to 2017 for a 4-hour chart. I will try to find a different example. So difficult with the platform. I'll try my best to find you an example, guys, okay? Okay, I think I did. I found one. Let me see. So, wait a minute. What do we have over here? We have the beginning of a downtrend, okay, right? So it came down here, then correct a bit, and then boom, down. So let's assume that I have seen this dip in the daily chart, and I wanted to investigate it further. So I went down to the 1 hour chart, to the 4 hour chart, sorry. That's annoying. I went down to the 1 hour chart, to the 4 hour chart to see whether there is any kind of a formation, either a diagonal or more waves. Nothing really. It was a 1, 2, 3. So 1 hour chart. In 1 hour chart, I could see up a sharp, up, down, up, down. So 1, 2, 3, 4, 5 waves. So there was a 5 wave. Okay, but it's not the 3, 3, 3, the diagonal that I'm trying to find for you as an example. Shame. If I go to the 30 minutes chart, oops, 30 minutes chart. It doesn't let, okay. Guys, I cannot find an excellent example to show you, but this is the mentality. I mean, if you see something, okay, right now we are in a 30 minutes chart, but it's pretty much moving sideways. So there is nothing over here that it leads us to a diagonal. I have connected the lows. I have connected the highs. So it's sideways. So it's not easy to spot a diagonal. But by connecting your lows and your highs, you might see one. If not, let's move on. If it's not there, it's not there. Okay. Just for the theory, okay, you can see it's difficult, but I have been seeing this on Instagram and Telegram about euro dollar. You mean? Yes, Ugo, you can download the class at the end. It will be on YouTube. Um, but we need time to upload it because it's a bit long, so we will need a bit time until the guys manage to upload in our YouTube channel. But anyway, you will receive it, the recording in your email. So Zuheru is saying, please, I want to know about this kind of currency pair euro dollar. I have been seeing this on Instagram and Telegram. So, and now he went offline. So I don't know what you want to learn about euro dollar, but today, today things are not so good because it's moving sideways since this morning, since the beginning of the European Open. So I have put as my immediate support level the 104 level, double fractal. So, and as a ceiling, as a resistance, the 1049. This is 45.9. This is my 30 minutes chart. So these are the immediate support and resistance levels. So in case that it breaks that, it's expected to go down. If it breaks that, it's expected to go up. So now it's moving sideways. So things are not so good. It's a bit sideways. It has been sideways since yesterday anyway. So yeah, so it is what it is. So let's move on. Ending wave, ending diagonal. So we said that in this case, it will be a 33333 formation and not 53353. And it can be seen in the final wave of each trend. So if you are in a bull market, you're going to see it on the fifth wave, on the final wave. If you are in a bear market, you can see it at the last at the very last wave, but it will be an inverse one. It will be an ending diagonal pointing to the downside. You see, so 3, 3, 3, 3, 3, and the end of the trend. So how you can trade something like that? Simply by entering as soon as you see the, so this is the, we are in an overall downtrend, and over here, the fifth wave, the final wave of the downtrend started. But we have zoomed in and we went to 1 hour chart, for example, and we have seen that, oh, within this, as the fifth wave is developing, I can see 3 down, 3 up, 3 down. So you have to connect your lows, okay? You have, you can see a rebound. So the fourth point has been formed. So you connect your highs and you can enter here as soon as you see this reverting lower. So as soon as you see it reverting lower, you can enter short with target at your trend line, because you have put already the trend lines on. So you know your potential target level. So your potential target level is based on the extension of this trend line in which you have connected the low number 1 and the low number 3. Okay, so you can gain with another sell position with target over here and entry on the rebound, on the reversal. Okay, it's not easy to enter at the beginning or in the mid, because you're not sure whether it will do this 3-3-3-3-3 formation. But it's okay entering at the final wave. Why not? An entry is an entry, right? So let's move on. Now an even more tricky formation. You occasionally see the so-called zigzag. Zigzag. Okay, what about zigzag? Zigzag is a more tricky formation. We can see zigzag usually in corrective waves. Okay, so we are done with the impulsive waves, and now we are moving on to the corrective waves. Remember, in an Elliott wave, we have 2 corrective waves, right? Am I correct? So we have, come on, in an Elliott wave, we have 2 correctives, the number 2 and the number 4, which are against the trend. So in these corrective waves, sometimes we might see a formation called zigzag. Here it is. And why is called like that? Because we might see, actually we might see 4 different formations. The very first one is called zigzag. There is another one called flat, another one called triangle, another one called double 3, or another one called triple 3. So let's start with zigzag. If we, in our corrective wave, we zoom in and we go to a lower time scale, we sometimes see 3 subdivisions. So 3 movements within that corrective wave. So 1, 2, 3. 1, 2, 3. So if we subdivide, if we zoom in our second wave, sometimes we see something like that. If we zoom in even further, so from the 1 hour code to the 30 minutes chart, for example, we might see the same formation again as Elliott. So 5 waves down, 3 up, 5 waves down. If we subdivide even more, okay, we might see 5, 3, 5, 3, 5, 3, 5. You say, oh, Andrea, this is getting so complicated. I know, but I need to cover it. So in any case, have in mind that in a corrective wave, let's call it number 2. If you zoom in and you see 3 waves, A, B, C, and this is not enough for you, so you want to open a trade in the long term, you want to open a trade as well in this, let's say, 4-hour chart, so 1, 2, 3, but you want to enter a trade in a smaller time frame as well, so you want to go down from the 4-hour chart to the 1-hour chart, okay, which is in this case is that one. Let's assume that it's that one. So if you want to trade these sub waves, have in mind that always the wave A and wave C will be divided into 5 waves, not 3. Only the corrective one, so the corrective one is subdivided into 3 waves. Okay, that's why it's 5, 3, 5, and then if I zoom in on the A, I can see another smaller, in a smaller scale, another 3 waves, which if I zoom in even further, I could see 5 downs, 3 ups, 5 downs. Okay, so what I can say about this, you should have in mind that wave B is always one of the shortest, is the shortest of the 3 actually, always. Wave A, so wave B will be from 50 to 85% of wave A. So the same rule that stands for wave 1 and wave 2. Also, the final wave, the wave C, it will be as big as 123% of wave A or as big as 161% of sorry, if it is 161% of wave A, then have in mind that wave C can be the third wave of a 5-wave impulse. So what that means? It means that if wave C gets as big as 161%, then you need to be careful because that means that you're going to see a small corrective wave again and another down wave again, another extension. So instead of a 3 formation, it will end up with a 5 Elliott waves. Oh, you love it. Thank you for your comments, Hugo. I thought it was too advanced and a bit messy. That's why I don't do it very often, because there's so many information, so many different patterns, so many different possible waves that we can see that it gets a bit complicated. But if you try and learn from by scratch some of the rules, like these ones that always, even if you're in an uptrend or in a downtrend or in a zigzag formation or in a leading diagonal or in a ending diagonal, if you stick on your head that the middle wave, the corrective wave, it will be the maximum 85%, then it will make your life easier. Or if you stick on your head that if the third wave gets greater than 161 of the very first wave, then we're gonna see more waves coming, then everything will get a bit easier, I think. Now, different formation is called flat. Why is that? Because it looks like the asset is consolidating. Why is that? Because we might see a down in 3 waves, 3 ups, and 5 downs. But the A and C sometimes might be on the same level. So you might not understand that. If you see something like that, you might not understand that it's a flat wave. And instead you might think that, okay, so this is an up, down is ranging. So I will trade on the rebound of point C. You might have seen them already, this kind of formation, but not realize that they have a name. Okay. So in this case, A flat wave is when we have 3 moves down, 3 ups, and 5 down. And usually the wave, the very first low and the final low, sometimes they are on the same level. Now, a regular flat is when the wave A and the wave B can be subdivided. So if we zoom in to investigate them, we might see zigzag or flat or double tree or double or triple tree sometimes. But if you see something like that, if you see the wave A, that is 3 moves, the wave B is 3 moves again, then you need to start and wait to see whether the final wave, the wave C, will start developing. So you can trade wave C. It's easier to trade wave C because you already spot this. Okay, so have in mind that wave C will be from 61% up to 123% of the first wave. So you need to put your Fibonacci's over here and wait to see whether it will break the 61. And as soon as it breaks the 61, you can set as a target the 100% and the 123%. So setting your target over here and another target over here, the 123%. Okay. And also, how you will identify that indeed I might see a final wave, a fifth wave, a C wave, sorry, is because you had these 3 moves, you had these 3 moves over here as well, but also it was in a ranging market. What I mean, that the beginning of the A wave, it's pretty much very, very close to the end of wave B. Okay. So this is an easier way. Now, expanded flats is the same like the regular flats, but in this case, the wave C, so the final wave, okay, the final wave extended even more. So even if you have put your targets at 100 and 123, you might see the asset extending even more and breaching the exact 161%. So how you can trade this kind of pattern? Okay, you have seen that it went 3 moves down. Then you have seen that it went 3 moves up. You notice that your B is very close to the beginning of the first wave. So you see this, you've seen this, and then you have seen the reversal, right? And as soon as it breached the 61%, you will open a trade, you will open a position, short position, with the very first target at 100%, which is this level, right? So your first target is over here. Your second target, we said, is at 123%, okay? So as soon as you see the asset reaching the 123 asset and breaking it, you can enter again. You can enter again with target at 161%. So you can have multiple targets. You can have multiple entries. Any kind of time frame, Diarugo. You might see something like that in an hour chart, in a 30-minute chart. Depends. That's why I am saying, if you see it, it's there. Okay, let's see. Let me check something. Because we were like checking earlier and we saw the asset ranging, the AMB, the euro dollar was ranging. So wait a minute. If I connect the highs, no. If I connect the highs, so okay. Today, so far, the euro dollar is consolidating, right? So far, it's consolidating. So I have put it 2 ups and 2 downs. So, okay, if I zoom in, this is the 1 hour chart. If I zoom on into the 30-minute chart, so that means 1 up, down. Actually, Um, well, come on, stuck. Um, Trend line. I want it to be thick and I want it to be wide and I want it to be without ray. So let's see. So we have up, down, but it's not any down. There is 1, 2, 3, 4. Oh, 5. Okay. Over here. Okay, so 1, 2, 3, 4, 5. Over here, there are just 1. Okay, let me zoom in. Now I'm in the 30-minute chart. Let's go down to the 15-minute chart and see what there is over here. So what there is over here. Oops. Zoom out a bit. So apparently, so let's see. We had our beginning. Okay. 1, 2, 3, 4, 5. And then it started fading and a downtrend started with another 5. Very interesting. And now where we are standing, so we have a 5 and 5, right? And now we are just in a downtrend. So it means that we need to wait and see whether there will be any corrective wave, no more than 85%. Okay, so you see how it works. Can you see? Okay, I couldn't find obviously this formation, the expanded flat, but I found an uptrend, which indeed it was subdivided into 5 waves, and downtrend, which it was subdivided into 5 waves again. And now I can see that a new, like a new possible, there is a new possible, sorry, 1, 2, 3, 4, 5. So that's my number 1, right? That's my number 1, the new one. Then my wave 3 came as down. So to be more precise, it's over here. This is the bottom. So it came as down, and I need to put it in a correct way as well. So to set it correctly, I need to put it like that. So okay, so this is my first. So this 5 wave formation is done. So a new one is ready to be formed. So wave 1, wave 2, which it reached to 85% for sure. I can add it on as well. Not trend line, I want the Fibonacci. Edit. So it's, if I add a new, no, it's not 0.856%, and it should be 85.6. Did I put it correctly? Indeed, guys, oh my God, this is how you should do it, okay? This is the way. So indeed, I spotted the wave number 1. Now the wave number 2, indeed, it didn't broken the 85% of my first wave. So I'm waiting for my third wave. As soon as the asset comes up to the top of the wave 1 and break it, I could open a long position. Are you with me? Are you as excited as I am? Hopefully you are. Hopefully you see what I see. So, okay, I didn't spot it an expanded flat. I didn't spot it a regular flat or whatever. But I think I have just started monitoring a possible. Why you're not enjoying it, Udo? Oh, I'm not. um. Yeah, excited. Can you repeat it, please? I'm here. I'm enjoying the class. I'm not. Okay. Someone is confused, but that's fine. That's an advanced level. It doesn't, you don't need to be aware of all this right now. You can come back 1 year after, and when you will be more familiar with the trading, and you can watch this webinar again. That's okay. So yeah, this is what I spotted just now. I started with 1 hour. I saw that I have two tops, two bottoms, so my asset was moving sideways. Then I decided in this 1 hour chart, then I decided to go down to the 30-minute chart and see what is going on. And I noticed that there I had since yesterday 5 waves up. So 1, 2, 3, 4, 5. Then I had 5 waves down, 1, 2, 3, 4, 5, and now I think that I have spotted a new possible Elliott wave, because I have wave 1, wave 3 that hasn't broken the 85% of wave 1. Okay, so what I'm waiting right now, I will leave that on, and I will check it like after an hour or after 15 minutes and etc. to see when or whether it will break my peak over here. As soon as it break it, that could be the beginning of the development of the third wave. So that means to the upside, okay? Okay, we left that expanded flat. So sometimes the final wave could, so I covered that. Let's go to the running flat guidelines. So again, it's a 3 wave. If we subdivide it, we can see a 3-3-5 formation, 3-3-5 pattern. We said I demonstrated how you can trade this final wave by setting your targets at 123%, or even if it expands even further at 161% of wave A. Also have in mind that if wave C doesn't break the wave A, doesn't come down to the bottom of wave A, then it means that it has reached to its end. So we might need to search for a rebound instead, okay? What else? So there are a lot of things, guys. I cannot cover them. I think I cannot cover everything today because we still have many slides, but these are just different formations of corrective waves or impulsive waves. So another formation that you might see in a corrective wave, by saying corrective wave, I mean the one that is against the overall trend. Okay, so if, for example, over here, let me zoom in. Okay, let's assume that yesterday you were so good that you have spotted this very first wave, this correction, this third wave. So you were you were really watching whether you were really monitoring, and let's assume that you were waiting for this third wave to finish in order to trade this corrective fourth wave. So in this corrective fourth wave, you can, now I'm in a 13 minutes chart, I can zoom in the 15 minutes chart and check whether and see, or even the 5 minutes chart. Okay, oops, let me find it again, come on. I lost it. Sorry, guys. Let me go down. So I zoom in the 5-minute chart. So here we are. We've seen the wave A, we've seen the wave 2, wave 3, and we were wanted to trade the wave 4. So the wave 4 just started developing, and you spotted that it is moving in. Okay, so it's already started, and you can see some smaller waves like being developing. So 1, 2, 3, 4, and so on and so forth. So you might see some again either a descending triangle, an ascending triangle, a contracting triangle, expanding triangle, if you go in a smaller time frames. Okay, so it's the same principle. Okay, it is what it is. It might be a 3 3 3 3 3, but it doesn't really matter. Even if you don't remember that, by spotting that, by connecting the highs, connecting the lows, you can see that it's moving in a triangle. So you know that as soon as the triangle breaks up, you can enter long. If you're in a triangle again, but it breaks down your trend line, then you can enter short. Okay, if you are in descending triangle but it breaks up, you can enter long. If it's a descending triangle but it breaks down, you can enter short. So you don't really need to remember all this, but yeah, but are there. So okay, double three. I think I'm gonna end this webinar over here because it's getting too long. Double three. Thank you for your kind comments, guys. That gives me a lot of strength, to be honest. I don't feel that I'm always as good. So, so as you wait to see if it breaks, we can take a trade position. You can take a pending order, Benjamin, if you don't want to wait. You can open a pending order and say, okay, since I spot that, or I spot that today. So here we are, okay. I spot that today. It satisfy the first rule that wave 2 is not more than 85%. So just for your own good, just to be calm and not to wait and see, wait in front of your PC, you can put an pending order and saying that if my asset breaks, goes above 1.0459, long position with targets at, so where will be your target? So you need to inverse your Fibonacci in order to find your target, because remember the rules. Remember, does anyone remember how long the wave 3 should be? Not greater, we said, than 161% of wave 1. So you can set your target. So you can say, I will open a pending order, a long pending order. So open the position. You will say you will open a pending position. Okay. So here it is. Okay. So enter long at 109.59, okay, with targets at 133 or 161, okay. So, or you can open two position, one up to 123 and one up to 120 and 61%. Of course, detect the volume. This is it's too big. So you will put your targets, blah, 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 your support level, your stop loss. So stop loss should be like a bit lower. Try to base your stop loss based on your risk and reward ratio. So put your stop loss and place a pending order, okay? Or you can put a trailing stop instead, etc. So you saw if there is a so pending order. Okay, you can place your trailing stop loss later. So yeah, this is the way, one way of doing it at least. This is another formation. It's called double three. Is when our overall so where is it? Double three is when we have a combination of two corrective patterns. So we have either a zigzag and a flat, or a zigzag and a triangle, or a flat and a triangle, etc. So a combination of two corrective structures labels as W, X, and Y. So this is a flat, okay, because it's a actually no, it's not. It's zigzag, so flat. Yes, 3, 3, 5. Yes, this is a flat. Remember we saw it earlier. 3, 3, 5, 3, 3, 5. When there are two bottoms equal, and it's a 5, 3, 3, 5 formation. So 3, 3, 5. This is a flat. Then we just have anything actually. So we have 3 up, just 3 up over here. So we had a 5, a 3, and then we have seen a zigzag. So 3 down, 5 down, 3 up, 5 down. Remember the zigzag is 5, 3, 5. The flat is 3, 3, 5. And you might say, okay, Andrea, why you are saying all this? They need to happen in order to see them. Of course, but that means by spotting the flat, then the any 3, and then by spotting the very first 5 of a potential zigzag, you know that the one that will follow will possibly be a 3-1. If it's a 3-1, then you know that you can enter short over here. Okay. So okay, and another one is a double 3. Okay, is when we have a flat, a 3, and maybe a triangle as well. Okay, this is another combination. So connecting the highs, connecting the lows, you can trade at the breakout. Okay, or it might be this kind of combo, double 3. So 3 down, 3 up, 3 down, then just 3 waves only, and then another 3, 3, 3 formation, which means that as soon as these 3 occurred, but your asset turned down and breaks the W or the previous lows, you can enter short and trade down to here. Or if you missed that, then you can trade at the end of this formation, which will be a bullish signal. These are very, very complicated, I know that. So you might ignore them, okay? So they are very, very, very advanced, unfortunately. But yeah, so I think let's leave it as it is. This is too tricky and it doesn't really, I don't think it will help you significantly. But yeah, let's finish with that. I think let's keep it simple, or as simple as possible at least, because the last ones, the double 3, the triple 3, are too complicated, and so I don't think, like, I never saw in my life something like that, or I never spotted it, so it might be too much for today, guys. Yeah, I think it's too much. Anyway, I show you, I send you the link in which I got all these patterns from. You can have a look, but yes, this is the double 3, and the triple 3 is getting too messy. I don't believe that anyone will be able to be as fast as trading, something like that. So this is the summary of our webinar. Feel free to ask anything you want. Let me see whether there are any questions. We show Emmanuel ABC. We showed it last time. It's a new pattern. What time are you like? Opening. No regret. I really appreciate this, Andrea. So insightful in understanding the movement market in general. Not excited. Thank you very much for your kind comments, guys. If you're struggling with anything, let me know. You can just take a screenshot of your MT4s and send it to the webinars at hotforest.com and say, Andrea, Stuart, I saw this, but I don't know what it means, or I saw this and I did this and this, but it didn't happen, or whatever, and we will try to help you to understand any mistake that you have done, and etc. Just feel free to contact us. Okay, that's a good question. Will the zigzag indicator done at a certain percentage will be able to present an Elliott wave? Yes. So let me get back to the zigzag. No, what is a zigzag? Yes. So remember that zigzag, the end of zigzag will be as soon as the third wave of the zigzag, okay, will not be greater than 161%. Okay, so zigzag is like that, right? Da, ding, dang, right? Okay, there are subdivisions. So if you zoom in a smaller time scale again and again, you can see again zigzag, zigzag, zigzag. But now, okay, zigzag looks like that. Okay, if the maximum that this third wave can be is 161%. So that will mean the end of it. Okay. Actually, to be more precise, the end of it will be the 123%. But in case that it breaks that as well, you can have another entry with a target up to 161. Now, that should be the very end of the zigzag. In case that, so you have set your very first target at 123, then you saw that maybe it breaks 123, so you put another target at 161, so a new position, smaller position, but a new position up to 161. So as soon as it breaches 161, then that will mean the end of the zigzag formation. If you don't see this happening, okay, if you see this third wave continue extending lower, then it's not a zigzag formation, but it might be, okay, it is a zigzag formation, but it might be it might have it might be a it might be no, yeah, it won't be a zigzag if it extends more than 161%. It won't be a zigzag, but it will be a downtrend and downwards Elliott. So if something like that happens, my dear, who asked for it? Murphy, if you see something like that happen, that means that it's not a zigzag anymore, but it's a proper Elliott wave, the original one. So it means that you're gonna see a corrective one at some point and a final fifth wave. So instead of 3 waves, you're gonna see 5. Is that clear? Hopefully it is. Yes, we're gonna have a review. I guess I will do it probably tomorrow. Is it tomorrow that we have a lot of date that we have the US durable, the US PC, yes, I think I'm gonna host the live tomorrow, dear Nicole. Yes, 20 past 3 o'clock GMT time. 20 past 3. It's always 20 past 3 o'clock. If you follow our YouTube channel and our Facebook, you're gonna get a notification. No, it's not a scheduled one, so I haven't scheduled an event. I will just go live. So it will be 20 past 3 o'clock. If you've already follow our Facebook page and our YouTube channel, you gonna see a notification. Even if you're not following them and you have the application, the HF application in your mobile phone, if you have the application download in your mobile phone, then we have a notification over there as well. Okay. So guys, this week I haven't scheduled the Facebook lives and the YouTube live, so I don't have links. I decided to go just straight live, okay? But it will be tomorrow, 20 past 3 GMT time. Okay, so when the data will be out that time, the US data will be out. So yeah, so we are pretty much done. Thank you very much for attending. Hope you're having a great day ahead. So this is another example. So feel free to see it. Okay, 5, 3, 5, 3, 5, and so on and so forth. So yeah, that was from me. Hopefully you enjoyed. So this is a zigzag, dear. Okay, 1, 2, 3, 5, 3, 5. A zigzag. So yeah, I have many examples. I forgot about them actually. So feel free to check them in your free time. Oops. And hopefully I'll see you again tomorrow on the live. Thank you very much for attending. Hope you're having a great day ahead. And see you soon. Bye-bye.